weekend all. I'm Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for a pretty wild month of August. It just ended today, August 30th, 2024. Do you remember when the VIX went up to 65, and here you are back to 15? The world was ending when we got that combination of crazy events when China was doing away with the carry trade by raising interest rates, cutting their balance sheet. You went up dramatically. Other events were going on at that point. And then in no time at all, the market just sort of settled in and all the volatility came out of the market again. You got to keep your head during times like that. And as you could see, it is an interesting time as I'm talking to you. So before I get too far, we're having a Labor Day special. Any 3 months of my research, we're slashing the price of it just over this Labor Day holiday. So it could be 3 months of the ETF spiders. It could be a combination where you get the futures and the spiders. It can be the complete futures, which is my twice daily written updates and the futures. And then you could add to that if you wanted. You can combine it with the spider ETF. Now, let's all be honest. At $32 for 3 months, what's that in the stock market investment you're making? Nothing. What if I offer you a good idea? I don't just throw the ideas out there. I show you the charts each day as to why. So if you're interested in seeing someone that puts together the charts, shows you the reasons why, taking a look, longer term trades, shorter term trades, and they are all broken down for you, and everything is there for you to look at both in the videos and on the website. Can't be easier. All you need to do is go to iraepstein.com. On the top left, you'll see the Labor Day special. You'll see an icon up here as well. Okay. So let's get away from this and see what the market is going to offer us on Tuesday when we come back, because, you know, in the spiders, nothing's going to be open until then. You get S&P Global Group releasing their final August manufacturing sector PMI. We get construction spending for July. Here we are going into September, but that's going to be coming out at that point. And the ISM will release their August manufacturing sector index, and that's all on Tuesday. But the real events that are going to happen here are the market's going to be about jobs this week. Once we get through that, you got the JOLTS report coming at you and the U.S. jobs report. Now, today we had the spending, income, PCE indices come out, and they were very favorable for the Fed to go ahead and make a cut. We don't know how deep the cut will be. I don't know if it'll be 1. I don't know if it's going to be a 25, a 50 basis point, but I suspect there's going to be a cut come the September FOMC meeting. And once they begin, they typically go a few times. Now, often you hear the market's going to break down in front of that, or when it happens. Maybe. This market has been highly unusual. And what I think is going on is we have to understand why we gotten unusual, and we have to look back to COVID. When it came out, and around the world, restaurants closed, businesses closed, offices closed, people working from home. It just completely redid modern times. And now here we are 3 years later, and you're still trying to get people to go back into offices. I know in downtown Chicago, that loop section is just unbelievably bad. I was there driving by, still empty. The Board of Trade, a ghost town. Nobody's really there anymore. Even the options exchange moved in Chicago to the old post office, left that area. So you're still feeling the impact of it, all right? But once interest rates come down, you start helping the market along with commercial real estate. You know, each time you drop rates, a little bit more life comes into things, and also new projects to get done. China is floating an idea of allowing everyone before year end. Now remember, we're still August 30th, before year end, to do something that they rarely do. Normally, mortgages reset at the beginning of the year. They're going to allow the Chinese citizens to go out, refinance, work with their bank, and they can take that mortgage to another bank to do a deal. So China's trying many things to prop up their sector. All right. BND, and yep, one of you did pick this, and that person will get a call from us next week where they can pick out one of the different things we'll offer them, absolutely free. And one gentleman wrote me, he didn't get it. I wrote him back and said, yeah, you did, and I talked to him today. He absolutely got what he wanted. He happens to be one of our subscribers, paid subscribers as well. And we did try to reach out, but I enjoyed talking to the people. So why BND should we cover? Because this and TLT and interest rates are what things are going to be about now as we get into the serious part of the last quarter of the year. And yes, you're leaving that summer, the tennis elbow, the US Open, the golf season. That'll all be behind you. Football season begins tomorrow, college games. It's everything kicking off in a whole different way. You kick off with us. But as you look at this market visually, well, you can see it's been rising as interest rates have been falling. The trend has been higher lows and higher highs. You just had a very important crossover. And let me walk you to this one because it is important. One more, I want to walk you back. There you are. Notice you have the 18-day average under the 100, the green. It crosses over here. Generally, when that happens, on any test of that, that should be a very big support number. I'm not saying it's going back down there, but this is a bullish event that just took place. Notice back here, you've been over with that average this whole time. So I think you're getting long-term crossover. That's one of the things as a chartist I'm looking at. This is where the market should have some problems going into the FOMC meeting. Yes, I know you'll tell me it's all about Friday, but it's the FOMC meeting mid-month. So there's time here for this market as it's come up and run this Bollinger Band to try backing away from it. You have an embedded reading. If you drop enough and the market doesn't lose the red line closing under 79, I think the pros will buy this on this chart. And remember, these are all weekly charts that we're looking at. I know someone wanted me to cover Amazon, and I will. That'll be one that's coming up because I myself am wanting to buy this stock too. Lower highs, lower lows, still in the bearish camp. You get bullish if it closes over 182.39. Barring that, you got to be very careful here because this market fighting a battle. Even if you close over 82.39, the 18-week average is 182.97. Now, the week before this, that average is 183.03. So it's not losing a real lot of money each week. I would assume that you're probably going to have the 182.90 area as the key number. So I not only wanted to get over that, but I'd wanted to close over 182.90 to get onto my hit parade as to where the market is shifting gears into the buy me zone. I don't see it here yet until that occurs. RSP, this is now as you know, the equal weight ETF for the S&P 500. And you could see traders have stepped into this market. They're no longer just married to NVIDIA, and we did a lot of talking about that yesterday, how I no longer think that its crazy numbers will be able to drive the markets one way or the other. It's gotten too big. And so now you're going to have to look at what is the PE to sales, what is the PE ratio itself, how is the market doing. It's now a big stock, so it's going to have to do all those things. And this is saying, well, the weighting of other parts, if you will, even this, has kicked it up. Would I ever tell you to buy over a Bollinger Band? It isn't going to happen. And that's because only 5% of the time does the market stay over or under a band. Now, when a band goes sideways like this, in order to break out, you do understand it's going to have to punch through that in some form and drag it higher for a bit, or punch through it on the downside and drag it down for a bit. In this case, it's punching it higher. You can stay upwards of 5 weeks in a row over it as you pull it. It still doesn't mean that I would tell you to buy it. I wouldn't play. There's other markets that aren't doing that I'd rather be in than get caught when it does nosedive, because it will in the end. It'll give you a nosedive, and that's the opportunity you're looking to come in. Dell ended on a weekly basis this week. It's downtrend. You have an outside week up. So leading to this, you've had constant lower highs, lower lows. You just changed the format of that. You were oversold. That does not mean I'm screaming here, go out and buy the market. It may go to the 18-day average at 128.15, but it has stepped out of that, and that means don't be short the market anymore to me. It's not in a buy mode for me. CrowdStrike did something similar if you think about it. It had a complete vertical price decline off of a snafu, whichever grammar you want to use, and they haven't honed up and come to it. I saw the interview on Kramer, and very nice job by the CEO. And the market now is saying, okay, let's get that behind us. Do I think we'll visit this again? I've got my doubts. Is the market done just what we are looking for again? An outside day up? It is. It's coming off an oversold area. So it's no longer the place to be short, but it's not screaming buy me either. There's still problems there. Meta is bullish. Higher lows, higher highs, still caught very much in this sideways action. When you got up to the Bollinger Band last week, you are getting thrown back. I see support back at the 494.70s, and it's a bit overbought to be reaching for it as I read the charts. And remember, I really pay attention to slow stochastics. Momentum up, momentum down, getting overbought, getting oversold, or locking in momentum. Well, you're overbought in the momentum here. This is your first challenge of the 200-day average. You tried this before, fell apart, came back, and this is the first challenge since back here, so it's about 3 weeks later, and the market should have an easier time with it, but no, it's overbought, it's at a key resistance point and the Bollinger Band. I'd let somebody else want to own that. China, as I said, they're trying to do everything. Now, you had a bounce. Didn't quite get to the Bollinger Band. You did go back to the 18-week average, and that is where I think the pros were selling the market with stops over that high. Maybe you get to 39.98. But if you were one of my subscribers, I'd be saying to you, why are we doing that? It's leaning on a 30 number. Let it rally more and make a decision, and maybe it even gets turned around eventually. I don't know. I know they're trying things in China. Excuse me. In the industrial sector, again, when you go sideways, and we should look at this together, and I think you'll see the sideways. Here you go. I think you'd agree, narrow band, sideways. No longer a pattern like this, coming up, if you will. If we come over here, a bit of sideways. And inevitably, when you come out of sideways action, you have to push on that band up or down to break out of it. You tried here, you failed, you went back. I think you see that to the Bollinger Band. Then you came back up. I've got new energy. Let's see what I can do this time. And the market's pushing the band out. It's another one of these situations where, no, I would not tell my subscribers to buy. Why? Where are you going to put a stop? I mean, as a chartist, you don't just buy. First of all, why use a chart if you're just buying blindly and you say, oh, I'll put a stop of 10% risk? I don't believe in any of that. So no, I would not buy over that indicator. I wouldn't buy when it's overbought. I realize it's no longer in a downtrend, but I cannot scream at you. Cannot scream that it's got a tradable uptrend. What it's got is it certainly moved to the highs. We haven't seen these highs in a long time. We know why it's happening. We know it's because the government's going to lower interest rates. We know that eventually, the word is eventually, that'll flow through to industry. We know that with all these tariffs, people are bringing businesses home. You can't run a business when your supply chain is going to be tariffed. It just doesn't make sense. I just see excuse me there, sideways action. I apologize for the cough. It's allergies, the remnants of that COVID. In the energy sector, I was very surprised today. OPEC members, they have big mouths. They just come out and talk. Maybe it's not big mouth. Maybe that's what they want to do. They said that in talking amongst themselves, the members, they're still of the opinion that there's going to be an increase in production in October. Okay? They're using, and they can do that, it makes sense. They're using the situation in Libya where production was about 180,000 barrels, 200,000 barrels a day shut off effectively. They're using the situation where voluntary cuts are supposed to come from Iraq and Russia. So the members increase production, but you want to look at the net number. Don't go by the headline. Got it? Very important. Russia keeps saying, we realize we overproduce, we're going to cut production. I haven't seen it happen. Iraq has said that they have agreed to do the same. We will see. I don't know. But I know that the chart action right now, this is a rally into market that's still bearish. You really have to get over 94.14, this high, in order to say it's no longer bearish. I think the pros sold it this week into that. In the dollar, it's time for a bounce. It's all it is. You can see how far down you came. You got oversold. You got to the Bollinger Band. You can bounce. I'm looking in time here for this number, the 28.53, which is a 100-day average, for the 18 to get underneath it and give us a classic setup where the shorter-term average is over that. If it rallies more, this is where I think this combination, 53 to 68, where the pros will sell it, which stops over that high. However, I would not tell you to deploy money in a market that's oversold. You wait for the situation to clear up. And in the gold market, down 73 cents today. The futures were down hard, $25 or so. I'd never go on a Friday into a long holiday and worry what markets do. Do you want to know why? In terms of analyzing and what I should do for putting the money in, it's too thin. It doesn't take big orders in some markets to move it dramatically. Number two, this is Labor Day in the United States. That is not celebrated all over the world. They'll be trading their markets. They could either gobble it up and say it got too cheap on the futures markets. We don't know what's going to happen. But I know that I would not tell you to buy an upper Bollinger Band when the market's overbought. And in the copper market, simply put, you fell too far. You got to the 100-day average in the Bollinger Band. You've rallied back up here. Keep your eye on what China is doing. If China's techniques and plans and experiments, that's a good word, work, where, remember, they did 10 cities where they took away the set price of new buildings. Remember that? I talked about it 2-3 weeks ago. Now they're flirting with, and they're floating this idea of refinancing mortgages before they come due at better rates. They're working on things to make the economy come back because, like everywhere else, people's homes are one of their main assets. And when the value keeps falling, they don't spend. They're looking inward for the country to grow, but the consumer's not spending. They got to make them feel more comfortable with their home. That will help copper down the road. And copper is going to be in short supply as other countries keep cutting what they've got. So you put it all together, that's the game plan. Please, take a try at one of these. I've made the price where it's not going to break you to give it a try. And what if I come up with a good idea for you? I think I will. I'm Ira Epstein, iraepstein.com on the top left. All you need to do is take a look at the Labor Day holiday. You'll see it in bright green up there, or move your cursor up here. Have a great weekend.